right, video number 3. We're up to the letter E, and E stands for election. Now, are you thinking the election of the Brexit? Meaning if Britain is going to stay into the European Union? That's a good one. We can certainly do a video on that. But actually, this is more about Democrat versus Republican. The reason I say it that way is because the major players in control are on the Democrat side. So the Federal Reserve raised interest rates in December. They raised it a 0.25% in order to test the waters of whether there was inflation in the environment. Remember, they want inflation. The current Obama administration wants inflation because that shows that you have a robust economy, which we do not have. So when they did this in December, what was the result? We had the worst beginning to a stock market in the history of the markets. The market went straight down as the worst beginning. Now, as you can see here, this is through January, February. But I want you to notice this date right here. So this is the peak. This shortly after the Federal Reserve announcement. And I want to come over here in the same date. See this date right here? So this is April 6th. Can you see at the bottom of the screen? April 6th. So I want you to remember that date. Really, I want you to remember this little period right here, April 11th. But we'll get there in a second. So there were back-to-back meetings that are critical to what we're talking about in this video series, also what's going on in the summer and setting us up for the balance of the year. So the critical meeting on April 11th and on April 13th. On April 11th, Janet Yellen had a unscheduled, dare I say, secret meeting with the White House. This was non-public. And there was no transcripts of the meeting. Now, folks, there are only two reasons for the chairman of the Federal Reserve to meet in the White House with the President of the United States. There's only two. First is if it's political. And second is if a bank, a major bank, is about to fail. Those are the only two reasons. Everything else needs to go through its normal process and protocol. Now, I know it's a big shock to you that our Federal Reserve could be politically influenced, but let's take a look at what the White House posted concerning this meeting. It was part of an ongoing dialogue on the state of the economy. They, Janet Yellen, President Obama, discussed both the near and long-term growth outlook, the state of the labor market, inequality, and potential risks to the economy, both in the United States and globally. They also discussed the significant progress that has been made through the continued implementation of Wall Street reform to strengthen our financial system and protect consumers. Oh, you couldn't do this over the phone? You had to have a secret meeting with no transcripts in order to talk about this stuff? You see, from the political point of view, Obama wants a Democrat to win. And there's an advantage to raising interest rates because that shows what? That the economy is doing well, right? That the economy is growing. So if you can get away with it, that's a good sign. So then the White House gets to say, see, we're in recovery. That's why we had to raise rates. But as we saw in January, if you do raise rates and the market tanks and kills you and brings into question everything about the economy, then that's bad news. So it's kind of a pickle between this conversation of Janet Yellen and President Obama. So maybe the meeting was, let's just make sure we get this thing right, okay? So that leads us to the second meeting, which was on the 13th. And that was a joint press conference between the Federal Reserve and the FDIC. In this press release, it was made clear that five of the 8 systematically important U.S. banks had failed to deliver adequate 2015 resolutions. These are basically living wills mandated by the Dodd-Frank Act. So what they said is these 5, so this was Bank of America, New York Mellon, JP Morgan, Chase, State Street, Sorry for my scribble writing. I'm trying to be quick here. And Wells Fargo. That their resolution plans were not credible and did not facilitate an orderly resolution under the U.S. Bankruptcy Code, which again was the statutory standard established in the Dodd-Frank Wall Street Reform Consumer Protection. They gave these 5 firms until October 2016 to get their act together and address the, quote, deficiency. So, what about the other 3? Well, the other 2, Goldman Sachs and Morgan Stanley, were mentioned. They weren't in the same category, but they certainly identified weaknesses. And then the only bank of the 8 that was not identified, that got the big thumbs up, was CitiCorp, which shouldn't be any shock. Robert Rubin, who was a former Clinton Treasury Secretary, and Jack Lew, who was the Deputy Secretary for Hillary Clinton when she was Secretary of State. These folks are giving Citigroup the old thumbs up, but I digress. So, going back to the 2 reasons for the Chairman of the Federal Reserve to meet with the President of the United States in the White House unscheduled is if it's political or if it's a bank failure. So guess what? It could have been both. And that's why I wanted to make this E about the election, because this is serious stuff, folks. I mean, we're still in the long shadows of all the failures in 2008 that the Federal Reserve had to bail out, and the problem wasn't fixed. This is the main reason that if you watch the first video on trouble, this is one of the main things I'm pointing back to. But there's a theme here that we're going to build on in the balance of these videos, and it has to do with the Federal Reserve. It has to do basically with central banks and the coordination. It's mainly the big 4, so that's the Federal Reserve, Bank of Japan, the ECB, Europe, and China. There has to be coordination between all these banks and what's going on. They're all trying to create inflation, but the coordination is getting stressed. And as they say about politics, what do they say about all politics? All politics are what? All politics are local, meaning your local economy drives your decisions. And we're going to get into this more in the upcoming videos. So as always, go to Brinkman Academy to watch all the videos, but be on the lookout over the next couple weeks on N and D of our acronym trend. Thanks for watching.